All right, welcome to the weekly prep video for the week of December 8th to the 12th. In today's video, I'll be going over the action from the past week of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like I do with every weekly prep video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments section. Starting things off, great week again last week. NASDAQ up another 1%. On Friday, we did see a little gap up, rally into a resistance gap. A little bit of a sell-off, kind of middle part of the day. Still closed positive on the day, up another 0.4%, and still over the 5-day moving average. Still held the gap up, all good things. But after about 2 weeks coming straight off that correction lows into a resistance gap, maybe time for some more choppy action, pullback. Pull back to the 10-day moving average, this gap zone around 618. There will be some really quality bases out there in the growth stock land. So I'm actually kind of hoping for more chop and more pulling back this upcoming week so we can have a really nice market to trade in the following week. S&P 500 up 0.3% for the week. Basically just chopped sideways for most of it, rallied up, and very similar to the NASDAQ. Tried to get through that resistance gap, actually got very close to new all-time highs, but reversed, closed below that entire gap zone. Still up on the day, up 0.2%, still above the 5-day moving average, all those things, but definitely some kind of selling pressure coming in. Could just be profit taking after, again, just 2 weeks of going straight up off those lows. IWO down 0.6% on Friday, inside candle, but really good action, up about 1% on the week. Gonna hear me say this a lot, but some choppy action here. Build out a handle for this cup would be ideal. Then ARKK, nice to see, up 2.8% for the week. Choppy action on Friday at that resistance gap that the Thursday rally paused at. Finishing the day down 0.9%, but on lower volume than the previous day. I don't think that's doing anything wrong. And this was a kind of index that, or ETF, that was showing relative weakness, not really as strong as the NASDAQ and the S&P 500 when it comes to where the price action was compared to the moving averages, but really started to play catch up in the second half of the week and then just a little bit of a chop on Friday. Switching over so we can take a look at Bitcoin and Ethereum. A little bit of weakness on Thursday and Friday. We took out the kind of like middle rally bars highs and then immediately reversed, lost the 20, the 10, the 5-day moving averages, and that 90K level. This could still just be a higher low. So we had the low at right around 80. What was this at? 80K. 80.5K, November 21st, then another flush here, but that was a higher low on December 1st. This could just be another higher low as we build out a little base here, but we don't want to see more follow through to the downside because Bitcoin I use as kind of a risk on, risk off indicator, and it looked like we were starting to show as a risk on signal, but we'll just check this every day and bend to the action that we're actually seeing instead of predicting what's going to happen. Ethereum right at that 3K level, also right at the 5, the 10, the 20-day moving averages. Could just be a little rally, retest of that area. But again, we'll see if we follow through to the downside or find buying support and follow through to the upside. Hopefully we'll have more information by Monday, and that can kind of steer our judgment for the rest of the week. Getting into the 9 liquid leaders, let me sort this by price percent change for the week so we can talk about the strongest names. AMAT, a new addition last week, just very strong action over that 5-day EMA the entire way. On Friday, just churning, closed a little bit lower, down 0.4%, still over that 5-day moving average on well below average volume, which to me, whenever that happens, that's just nice consolidation before another leg higher. This action really started on November 14th, where we gapped down on earnings into the support gap, immediately got bought up, and then with the volatility of the market, still held the 50-day moving average on a closing basis every single day. When that market pressure got relieved, we saw straight up action, which is exactly what you want to see. ASML up 3.7% this week, a gap down on Thursday and tried to test that level, got rejected on Friday, closed at the 5-day moving average. But similar to AMAP, 2 lower volume pullback days, still above the 5-day moving average on a closing basis. This could pull back into the 10-day moving average and give a really nice risk reward spot. It's not on the long setup, but could be one of the ones that you keep an eye out for at that $1,075 spot. NTRA up 2.4%, a new all-time closing high. On Friday, up another 0.7%. We had this little flag kind of going into Thursday's action, followed through to the upside, and then some strength as well on Friday. LITE up 0.9% on Friday. A little bit weaker closing range overall, but still, again, over the 5-day moving average has been a phenomenal stock. Continues to march higher. Even when the market was pulling back, this was building out higher lows while the indexes were making lower lows, which is exactly what you want to see out of a leader. Google, nice action on Friday. We closed above this little resistance gap with a gap up ourselves, open on the low, closed kind of middle part of the range, which compared to the NASDAQ, compared to some of the other stocks in the market, some nice relative strength there. And this little flag continues to build out. If the market chops next week, lets that 10-day moving average catch up and let the 20-day kind of catch up to the lows, that would be ideal for another ad spot. Apple flat on the week, strong start to the week end to the week, back into the 10-day moving average. I don't think it's doing anything wrong. Just a breakout retest of that 20-day EMA, probably a good spot for a nice risk reward trade. Just not a very fast mover. And now that we have enough fast moving stocks in the market, I might look to replace Apple with more of a traditional like growth stock. Not that Apple's doing anything wrong. There's just some better merchandise on the table for growth stock traders like myself. AVGO down 3% this week, but we had the nice flush through the 10-day EMA on Wednesday, kind of an inside-ish candle on Thursday, then gap up, follow through to the upside on Friday, up 2.3%. These next two, GH and Eli Lilly, part of what was the strongest group in the market with healthcare and healthcare related stocks, started their pullback right now over the past like 5 or 6 days. And I still think this could be a group that is just kind of going through its first pullback while some other groups find rotation, which is perfectly healthy for a bull market. But if we see some real breaks of like the 20-day EMA on a pickup in volume, then I might replace these as well. GH down 6% on Friday, down basically 6% for the week, pulling into that 20-day EMA, just above the support gap, just above $100 and the previous breakout retest. Eli Lilly, very controlled pullback on lower than average volume on every day except for Thursday. Friday, lower highs, lower lows. Secondary close under that 20-day EMA. But again, like this is a very orderly stock on the way up, orderly on the way down. And if we can turn around right around this area or the gap zone at 990, maybe I still replace it on the leaders list because it's similar to Apple, a slower moving name. But I still want to keep my eye on the healthcare related themes because I do think that's a group that can lead end of this year, beginning of next year. Speaking of themes, let's go through the industry ETF list. Because it's the weekend video, I'll go through every single one. I'll spend more time on the ones that are more important to me and then less time on the ones that I kind of just scroll through. MSOS Cannabis ETF, nice to see that it's coming off the lows here, but still needs some work before I get interested in that. It was up 11.5% this week, though. UFO, great recovery this week, had been showing relative weakness. And we talked about this basically every daily recap video where we saw relative weakness turn into relative strength. And that's a sign of a market that's being accumulated, not a market that is being distributed or sold off into. So signs of a healthy market. Now coming into that 50-day moving average and the resistance gap on Friday, probably time to chop around a little bit. Maybe we can close above and then start to chop, but up 7.2% for the week and 1% on Friday. IGV, another group software ETF that was showing incredible relative weakness, turned it around, recaptured the 200-day moving average this week, got through the 20-day, and had a really nice rally on Friday. It was actually the top group on Friday, up 1.4%. Got that resistance gap that we failed at, for now at least. I wouldn't be surprised if we got up to the 50-day and then started to shop around, but like this type of price action, straight down, straight up, you need some volatility contraction in the group before we see some A plus setups. So hopefully we get that next week. NLR, nuclear and uranium themes, another group that was obviously showing some big relative weakness, didn't really pop up, didn't take out the December 20 or November 20th kill bar until Thursday. So was kind of lagging the market, even though it was climbing higher. It wasn't as powerful as some other themes. On Thursday, we really saw the heavily shorted stocks like nuclear, like precious metals, like quantum, that were heavily shorted, relatively weak, finally start to see some short covering and kind of a squeeze higher. On Friday, some major weakness there, down 2.8%, but still finished the week up 0.4%. Needs to chop around and build out a base. Robotics ETF, new 52-week high, extreme strength here. Definitely a theme that I want to be focused on. Up 0.9% for the week or for the day on Friday, and up 3.9% for the week. Very, very strong action. Got over November 20th SPAR almost immediately. And those are the groups that you want to focus on. IYT, the transportation ETF, new 52-week high closing price. Nice to see this after what has been like multi-month base. Big shakeout with that distribution on November 20th, and then just a rip into new highs. So this could be an emerging theme as well. Semiconductor ETF, SMH, very strong right off the lows. Now we're right back into the highs at this resistance gap. Uppercut and failed at that level. So after 2 weeks going straight up, it would not be surprising now that everyone is bullish again to start chopping back into the 10-day EMA, into the gap zone right around 350. I think that would be a perfect spot for a nice risk reward trade. XME, the metal and mining ETF, a little bit of weakness on Friday, down 1%, but still up 2.3 or 2.7% for the week and trading above all the key moving averages. Kind of a breakout retest at this 97.40 area, along with the 50-day, the 10-day, and the gap zone is a spot that I'll be watching. XRT, the retail ETF, continues to show great strength and was one of the themes that really looked like it was breaking into a stage 4 downtrend, closed under the 200-day moving average on November 20th. And since then, just extremely strong price action out of multiple stocks within the theme. Victoria's Secrets was the latest. It was up about 14, 16%, something like that, after they reported earnings on Friday morning. We have Kohl's, we've got Urban Outfitters, we have Abercrombie coming off the lows. Tons of retail clothing stocks, very strong. Cybersecurity up 1.8% for the week, 0.4% on Friday. First test of the 50-day moving average since really starting to break down there. Similar to these other kind of later or lagging themes, needs to build out a stronger base before I get super interested. XLE, now we're talking about bases, continues to build out higher lows this entire time. Really hasn't been like a super fast mover, hadn't reclaimed like the highs for the year. But if we go to a weekly chart, this is a almost 3.5 year base where we have just gone sideways for such a long time. And if we need just all hands on deck when it comes to energy to power AI, this could be a theme to focus on in 2026. I did start like some positions in like my parents' account, my brother's account, just in the leverage version of XLE to prepare for this breakout. But personally, haven't gotten any exposure in the group just yet. IYZ telecommunications ETF, new closing high for the year, very strong price action there. XLY, nice rally back through the key moving averages, the 50-day this week. We do have two resistance gaps up top, so maybe more chopping, but up 1.2%, 1.3%. FDN, mainly Meta, really starting to bounce back after their earnings collapse. Now they're snapping back. Still under the 50-day moving average and the gap zone at 275. So if we rally back up into there and then start to chop, we could start to build out a base in that group. PEJ, leisure and entertainment, very similar to the retail ETF. I thought it was kind of a head and shoulders dying pattern here. But the last 2 weeks, very strong price action back through the key moving averages. We're starting to see stalling action here. So likely needs to pull back, test like the declining 50-day moving average, and then build out a higher low. XLF, the financial ETF, continues to get rejected right at the resistance gap from the October, what was this? October 30th, or sorry, September 30th, October 1st gap down, but is above all the key moving averages, undercut the 200-day, and then responded. And really, like, not too upset about how this is building out the base here. Still needs like a higher low overall to build up that pressure before a breakout, but I was really concerned that we were losing financials in a big way on that November 20th day, but instead of following through the downside, we reversed and rallied back up, giving the market more life. XBI, the biotech ETF, weak start to the week, strong close, closed at a new 52-week high. Continues to be one of the easiest trades of mine to hold with LABU, buying on that shakeout of the support gap, the 20-day EMA, and the previous pullback November 7th. Trimmed a little bit last the previous week, and now just sitting with still half of my position in that trade. KWeb, the Chinese internet ETF, flat on the week. We're starting to see a couple names like Baidu, like Futu start to perk up a little bit, but still a lot of weakness in that group overall. ARKG down 8.8%, down 3% on Friday. This is the genomics ETF. Really nice test of the 50-day, rallied up, new rally highs, and then some weakness on Friday, um, but on below average volume overall. Still looking for more consolidation here instead of like these wide and loose bars, and that'll come with consolidation in the overall market. ITB, the home builders ETF, really nice push on Wednesday, then a weak Thursday, a weak Friday. Another group that looked like it was done for, big reversal, but because the 200-day is like just flattening out now, this should not be a group to buy on strength. It should be one to buy on weakness. So pull back into that 50-day moving average is a spot to watch. XLP flat on Friday, down 1% for the week. Still just an overall weak group. Blockchain and kind of data center related names started to join the party a little bit on Thursday, but then gapped down on Friday, closed back at that 20-day EMA. Still needs a lot of work in my eyes, down 1.2% for the week. ITA, the aerospace and defense ETF, still needs a lot of time to build out this base, like a couple more weeks before it's attractive to me. XLB, the basic materials ETF, closed under the 5-day moving average, down 0.3% on Friday, down 1.3% for the week. 200-day is flat, so another group that you don't want to buy on strength, you want to buy on weakness. TAN, solar ETF, kind of in a do or die spot. I like the chart of TAN, but some individual solar names are acting pretty weak. SEDG in particular, below the 50-day moving average. CSIQ is kind of wide and loose, but First Solar, NXT, two stocks within that group, still worth watching. GDX, gold miners, down 2.6% for the week, but they had an awesome previous week into that resistance gap. Tried to push that level again on Friday, just not ready for it. So needs more time to chop around. And then XLV, the healthcare ETF, which had been leading the market higher, going through its first pullback, first test the 20-day EMA, since making new 52-week highs, usually a great risk reward spot. We're now just getting the 200-day flattening out and turning up. So that's a time to buy on weakness instead of strength. When you have the 200-day in a clean uptrend, you have less overhead supply, less people that are trying to sell at break even, and just an easier trend to the upside. But until you get that, you should expect like choppy action, and obviously like at some point themes have to pull back while money rotates elsewhere. Perfectly fine. I think a lot of healthcare names this week will be in do or die situations, and those are the situations that I want to trade, because if I'm wrong right away. So time value of money working in my favor, I get that cash back to use it for something else right away, and I'll be wrong very small. So very small, very quick losses. Those are the losses that I like to take. And if it actually reverses right around this 20-day EMA and starts to work to the upside, well, my risk reward, I'm going to get very quickly multiples of that risk as we break back up to the upside and money rotates back into what could be an emerging theme in the market. Before we get into the long and the short setups, we got some other things to cover. We're still in earnings season. It's not like the most important week for earnings, but we do have Toll Brothers and PHR, which are both home building stocks. So one of the themes that we're keeping an eye on, we'll see how those report. Excuse me. We have GameStop, not really important, but a couple other names on Tuesday. Wednesday after the close, Oracle, Adobe, SNPS, PL is the one I'm most excited for. What else? AVGO, Lululemon's, Costco, RH, all on Thursday after the close. So really Wednesday, well, Monday for the home builders, then Wednesday and Thursday after the close are the most important days for me. And then we do have updated NAAIM Active Investor Exposure Index. So this is, again, actual exposure positioning, not your sentiment surveys, which sentiment, like I don't even look at sentiment stuff anymore. It's all about positioning. And typically I would look at commitment of traders data, which we should be getting now that the government is back reopened, but we still have not gotten COT data. So for now, the only positioning that I have access to is the NAAIM. And we are back at elevated levels. We went from 90% to 98.5%. Usually over that 95% threshold is kind of a warning sign that breakouts might not be as clean to the upside. If everyone's already long, who else is left to buy? And if we kind of pair that with what the indexes have done over the past 2 weeks, just kind of going straight up and then into that resistance gap, and some of the weakness that we saw in the ETFs this past like 2 or 3 days, again, big picture wise, it would not surprise me if, like on the NASDAQ, we have a pullback into the 10-day moving average or even the 20-day moving average here. When we had a correction back last year, we had 3 weeks down, 2 weeks straight up, and then like a week and a half down before the uptrend continued. So something like this, where it looks very scary on the index wise, but the leading stocks and the leading themes in the market build significantly higher lows, that would set up a beautiful Santa Claus rally. So I'm fine with kind of wasting a week on pullback, on chop, on volatility, kind of chasing out the people that bought a little bit later, while positioning is heavy. The indexes are extended, so we can really prime the market for a Santa Claus rally, and then hopefully a strong January. That being said, we'll still go over some long and short setups. Um, but a lot of these you'll see I will be looking to buy on pullbacks instead of buying on strength. We'll go most liquid to least liquid. First one, Eli Lilly. Kind of covered this on the leaders list, but very subtle pullback into the 20-day EMA. When a liquid leader pulls back into the 20-day EMA, especially when there's a gap zone, like we've got this one at 990. I don't know if we'll get to that level. If we do see like a gap down on Monday and then we come back into this level, a reclaim of that would be viable. Or if we get a like another entry tactic of mine is like an ugly close under a key moving average, either the 20-day or the 50-day, followed by an unfilled gap up in a reclaim of that 20-day. That would be the buy point stop under Friday's low. Should be keeping risk very, very tight. It's a slow mover already, so you could probably size it up relatively high. I know there is a leveraged version. I think it's LLYX, if I'm remembering correctly. But this is a name in a theme that is going through their first pullback after making new 52-week highs. Very, very tight risk reward spot. Gold miners, GDX, covered this, I think, on Thursday's video. Wanting a pullback into that 20-day moving average, into the breakout retest, right around the $78 spot. And then you could buy NUGT at that spot. But we obviously have sellers still at this area. We don't want to buy right into an area where there are sellers. That doesn't skew the risk reward in our favor. So we'll wait for more of a pullback into that 20-day, into the gap zone, and then manage risk against the 50-day moving average. CRDO reported earnings last week and gapped up on earnings, eventually sold off. But that's not really out of character for the stock. It did the same thing back in June's earnings where we gapped up, finished that day at 14%, kind of chopped around for a couple days, eventually came back into the 10-day moving average, had an inside day, and then broke out from there and went from $72 up to like $172. I guess there was one test of the 50-day in that area, so maybe you get stopped out like on August 19th spar. Still, very clean trade. So it's within the character of the stock to gap up on earnings, then sell off, and then start to build out higher lows. So we'll keep an eye on the 10-day moving average, the support gap, and if the market goes through a further pullback, the 20-day moving average and the gap zone at 164.26. Open Door, to me, kind of feels like the quantum names, not as long of a base that they had from like their December, January to August rallies. But this is a name that like was completely ignored for such a long time. Monster move on monster volume from 50 cents up to $10. And instead of dying after that, it has just gone sideways. If they were going to kill this stock, it would have died on November 7th on their earnings. But they gapped it down on earnings and buyers stepped in a big way. We had a 4-day rally. We'd even measure that to see from the open on that earnings gap down to the high, 75% move. Now that in itself is that is a move that needs to be digested, which we've done with one wave down, a higher low, a rally up, a second wave down, so far a higher low. And I actually bought this on Thursday. I'm in the money by like 3 cents. My average is 712. But I think this could be just another higher low because the market pulled back a little bit on Friday and some of those like risk on type names pulled back quite a bit. What I would be looking for here is either a ugly close, gap up, opening range break, stop would be today's low, or a shakeout of this low, reclaim that area, and then your stop is whatever that new low is. I don't really want to buy it into strength because we have this resistance gap right here where we've like sold off a couple days. But if I could get a little gap up, like right into the key moving averages, like a reclaim of the 5, the 10, the 20 day, right around that 730 spot, I think that's buyable versus Friday's low. Reddit kind of feels like this was a leader back when the market was going higher. Was one of the first stocks to start to break down, and now one of the first stocks to actually show some nice strength here. Because we've already had this gap up, I'm not trying to chase the name higher here, but I do have alerts right around this 225 level. You have the 5-day moving average. It's not quite ready to be bought, but this could be one of those names where the market pulls back in a pretty aggressive way, and this name could either go sideways or pull back in a much lighter way, just kind of like a breakout retest of this level, the gap zone. And hopefully, if it happens in the later half of the week, which would be preferable, you'd have that 10-day moving average catching up as well. So probably not a setup for Monday to trade, but keep an eye for that 222.50 spot, the gap, and hopefully the 10-day moving average catching up. Similar idea with EOSE. This was a stock that kind of made a move later in the cycle, like in September, went from $6.70 up to $18. After a move like that, you do have to build out a base, and that's what it's been doing here. Really great action on Thursday, where all those high beta names, high kind of short float names got squeezed to the upside. Gap down and weak action on Friday, down 4.7%, but on much lighter volume. We don't want to chase it into a gap. Let this kind of pull back, build out a higher low right around this 1420 spot into the 10 and the 20-day EMAs. Then look for a alternative entry tactic, like a green to or a red to green move, like a VWAP recapture, maybe an ugly close followed by a gap up. So another name that's probably not ready for Monday, but not a name that I want to lose track of. PATH, Path, awesome move on earnings, up 24%. In that robotics theme that we talked about, so very strong. Great action on Friday. Nice closing range up 1%, recapturing that high volume close from earnings. Couple different ways to play this. If the market goes through a pullback, we got the 1750 spot to watch on pullback. That's a spot that I would be most aggressive sizing up because you'd have the 5-day moving average catching up to that in a very short amount of time. If we gap up and have like another strong day, then pulling back into the high volume close as the market pulls back, that's another spot to watch. But again, I like the 1750 spot a little bit better. FUTU, we talked about the Chinese stocks starting to show some strength. This is one that was the leader off the lows, was the only stock that got right back to its all-time highs. And now it's just building out a handle here, which is perfectly healthy for the stock. And after a couple pretty violent shakes and now tight action, I think it could be one of those names that are ready to go. We have an inside candle on Friday. Just through Friday's high, stop at Thursday's low would be the trade in that name. Guardian Health, GH, very similar to Eli Lilly, is pulling back into a very key spot. We have the 20-day EMA. We have a support gap. We have $100, a round number, and we have a breakout retest. So an undercut and reclaim of all those areas, you're going to stop out a lot of traders, and all of that buying, or all of those buyers or holders of the stock after the undercut and the reclaim are now potential new buyers, especially as the group is pulling back for the first time. This is a key spot that if it was a much more liquid name, like an Eli Lilly, but with this type of volatility, like an ADR of 5%, I'd really be aggressive sizing that up because it's a little bit less liquid. I know it trades $230 million a day, but like the intraday chart is a little bit gappy. There's like a bid-ask spread that's a little bit wider. Um, I won't be hitting with like 30% size. I'd be trying to get like 20% on that trade. PAAS, silver mining stock, we covered on Thursday. Just like the gold miners, tried to go on Friday, just not quite ready. So a pullback into the gap zone, a breakout retest of 4260 is the spot that I'll be watching. Home Builders ETF, you don't have to trade the underlying. You could trade the leverage version, NAIL. But we rallied up off the lows in a very strong manner, right into a resistance gap. Don't want to be buying into that area where we know sellers are present, especially with the 200-day just going flat now. I never want to buy on strength when the 200-day is going flat because we have all of this overhead supply where once you get back to break even, people tend to take those trades off the table, which creates the selling pressure. So don't want to buy that on strength. Let it come down and undercut the 50-day moving average. The 20-day will probably catch up to that area as well. We have $100 a little bit lower. Probably won't get down to that level. But I'll start looking for some intraday reversals at that 50-day moving average, 101.74. Whenever you're doing technical analysis, make sure you're doing it on the underlying ETF like ITB. And then if you want to trade the leverage version, like I like to do with NAIL, you could trade NAIL, but don't do your technical analysis on the leverage ETF. Do it on the underlying. Couple of retail clothing stocks next. Kohl's, KSS. Really awesome move on earnings up 42%. Followed it up with another 7.5% higher. Then, as that group started to show some weakness, we pulled back 7%, down 2%, right into the high volume close, bounced there. Now, just looking for a higher low test of that HVC would be the entry right around 2250. Stop under Thursday's low and the 10-day EMA. The Real, another name that has made just a monster move off the lows from $5 up to $15. Starting to flag out here. This is another name that has it trades a little bit thinner, $60 million a day. So make sure that you're seeing strength come back in the name before you buy on weakness. Otherwise, it could just like very quickly kind of unravel on you. But an undercut of the 20-day moving average into this gap zone right around 1340. That's the spot that I'll be watching for an undercut and reclaim. JMIA, another retail name, back through the key moving averages last week, pull back into the 50-day, bounce, and then close at the low today, or on Friday. So just another pullback into the support gap, into the 20-day EMA, right around 1150. That's the spot that I'd be looking for with the stop at December 3rd's low, just under 1120. Then last one, AXTI, a pretty thin name, so not like the highest up on my radar, but a name that pulled into the 20-day moving average, had a nice breakout from $9 up to $13. Now kind of a breakout retest of that level. The 10-day moving average and a support gap right around 1080 is the spot that I'd be watching for with the stop at the 20-day moving average. Hopefully that'll catch up, and then we could use the low from December 3rd as well. Then on the short side, not too many quality short setups that I'm seeing. Not many that are ready like right now. We'll still go over them. Microsoft is the first one. Sold off on earnings back in August, sold off on earnings again back in October, and now like really just showing some weakness. Came back into the 200-day moving average. You don't want to short right into a key level like that. You have the 200-day and a support gap. If you take that trade 100 times out of 100, you're going to get your face ripped off with a bounce back. That's exactly what happened here. Rally back up into the declining 20-day EMA. Gap down, uppercut and failed at that level. That, like, we talked about that as a potential short. And then we had the news that they're like kind of slowing down on their AI. A little bit of weakness on Wednesday, was that? Yeah, Wednesday. General market strength Thursday and Friday kind of brought it back to the 5-day. Still don't want to short this on weakness because like again, you want to skew the risk reward as much in your favor as possible. And if you're shorting at 475, when the 200 day where we bounced before is at 470, you're just not getting much room before potential buyers step in. So let it rally back up into that 20-day EMA, into the resistance gap where we know sellers are present, so we can skew that risk reward in our favor. It probably gives you a lower win rate when you do that, but I'll take 5 losses like this in a row, very, very small. And then if I get one winner, it pays for all those losses and much more. That's the way I like to trade. AMD was on the short watch list on Friday. We had a rally back up into the 20-day, just below the 50-day. Sellers came in at that level, and then we closed lower. I did not personally take that trade. I just didn't want to do much on Friday. But another little rally into the 20-day stop would be above that December 2nd's high. And we'll just see if this is a sign of semiconductors, or at least some semiconductors acting weak. We saw Nvidia still acting weak. I just don't want to short Nvidia. Um, but it's great to see, like, even though Nvidia is weak, even though AMD is acting relatively weak below the November 20th kill bar, semiconductor ETF still very strong. So there's rotation within that group and some new leaders emerging in that theme. AMZN, little uppercut and fail. The resistance gap above the key moving averages on December 2nd. Weakness the rest of the week into the 50-day. Still don't want to short this on weakness. Let it rally back up into that resistance gap right around 235. Then we can keep our stop over 240. HIMS, this feels like kind of a topping pattern. Like, it looked really good on this day. We had higher lows, nice base, but we gapped down and really started to sell off. A little bit of volatility around the 200-day moving average before further selling. Again, you don't want to short into weakness after, what is this, 20 days where half or more than half of them are on the way down. We rallied back into the 20-day, built out a higher low. We had the heavily shorted names get squeezed on Thursday, almost got to the resistance gap on Friday. That's the spot that I'll be watching for, right around 41.50 as a potential short entry. Roblox has been just a horrible stock since the gap down on earnings, where it was down 15%. We lost the 200-day moving average, bounced at a support gap, built out a higher low, add another support gap. So don't want to short right where we know buyers are present. Let a rally kind of force shorts to cover their positions through the 20-day, through the 200-day, get it back through the gap zone, through $100. Like, the more key areas that you could take out where shorts are like, okay, I have to cover now. Then you see weakness, the more potential shorts step back into the name and drive it lower. And that skews your risk reward. But you have to let it force the shorts out and then show weakness before you get back into the name. So this like 102 spot is where I'll be watching. QUBt, I did take this short on Friday. It's one of the weakest, if not the weakest, of the quantum names. Did have a nice short squeeze Wednesday and Thursday, up 9.5%, up 12.5%, back through a key moving average, the 200-day. And then right after a close over a key moving average, you get a gap down in a weak close. So what I would be looking for here is a rally back up into that area, into 1340, and then some weakness, a loss of the intraday VWAP, something like that, to get short as close to that 200-day as possible, and then keep your stop at like 3 or 4%. And last, we have Dave. This is, to me, kind of feels like a later stage base. It's already run from $4.50 up to $280. We had a pivot failure around earnings. We lost the 50-day, came into the 200-day, bounced there, which a lot of stocks will bounce, but now a reversal at that 50-day and some general weakness this past week. I rally into the 50-day, into the gap zone, right around 218 is the spot that I would look to short versus the high from that November 28th reversal bar. And then bonus one, Costco. This has earnings on Thursday, but it does feel like this is just so primed to enter stage 4 decline. You have your stage 2 uptrend, stage 3 top, lower highs off that 50-day moving average. That's usually a sign that institutions are just dumping into any pops back into the 50 or the 200-day. Rejection, rejection, rejection. So we'll see how earnings play out, but we just had another test of the 50-day, followed by a massive gap down and then a weak end of the week. So not really like you don't want to start a position into earnings, but keep an eye out for Thursday's earnings because that's a stock that could fall apart. And that's going to be the weekly prep video for the upcoming week, December 8th to the 12th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, you can sign up for the Market Pulse Discord using the link in the comment section. I hope you have a great weekend, and I'll see you guys in the next video. Take care.